All right, let's talk stocks. Specifically, the S&P 500 and Nasdaq Q. Remember those post-election highs we saw? Gone. The S&P 500 just wiped out all those gains. So the big question we're diving into today, have we hit the bottom? Or are we staring down a bear market?
It is fascinating. The S&P 500 did take a hit, but we actually just witnessed a surge in the market overall. The Dow Jones, the S&P 500, and even the tech-heavy Nasdaq Q, they all closed higher, significantly higher, actually. We're looking at 1.1% for the Dow and the S&P 500, and the Nasdaq Q jumped 1.5%.
So up while being down. That sounds more like a roller coaster than a market. What's fueling this wild ride?
Well, those tariffs, the ones that the Trump administration imposed, that uncertainty really spooked investors, especially in the auto industry. Automakers were bracing for impact, but then, plot twist, the White House announced a one-month exemption on tariffs for Mexican and Canadian auto imports.
Hold on. So a temporary break on tariffs sent the market soaring. Sounds like investors are hanging on by a thread, desperate for any good news.
Well, you hit the nail on the head. It really boils down to investor psychology. The market hates uncertainty. Even a short-term exemption like this offers a sliver of hope, and boom, investors react, sometimes irrationally. We saw this play out with companies like Ford and GM. They both jumped around 6%, 7%. Stellantis, though, they shot up 9%.
So temporary relief for automakers equals a market sugar rush, I guess. But let's talk about that ADP employment report. It wasn't exactly a cause for celebration, right? Private sector job growth was way lower than predicted, only 77,000 jobs added in February.
That's right. And this is where things get a little bit tricky. A weak labor market could indicate a broader economic slowdown. And when businesses aren't hiring, it impacts earnings. And ultimately, that affects stock prices.
Okay, so tariffs are looming, job growth is sluggish. Not exactly a rosy picture. But weren't some of the other economic indicators actually looking pretty good? Like services sector activity and factory orders, those exceeded expectations, right?
You're right. We are seeing mixed signals. And that's why everyone is kind of laser focused on Friday, March 8th. When the February jobs report, the nonfarm payrolls, comes out. It could tell us if the market's headed for a boom or a bust.
So it all comes down to Friday. What are you thinking? Feeling optimistic? Or are you bracing for impact?
It's really tough to say for sure. But one thing to keep in mind is that even with those positive indicators, the outlook remains uncertain. We've got factors pointing in both directions, making this market incredibly unpredictable. A bit of a nail-biter, honestly.
Definitely shaping up to be a week for the books.
Yeah.
Before we get ahead of ourselves, though, let's talk about oil prices. Crude oil futures took a tumble, hit multi-year lows. What's going on there?
Well, it's a combination of things. You've got those tariff concerns, but also OPEC Plus surprised everyone by increasing oil production.
Okay, so cheaper oil. Does that mean cheaper gas for us? Sounds like a win, but I feel like there's a catch.
Yeah, lower gas prices are great for consumers, absolutely. But for energy companies, it's a different story. Lower prices mean lower profits, which could lead to cutbacks, less investment, even job losses. It's a classic economic tug of war.
All right, we're back, and it's crazy to think about how all this market craziness, all the numbers, ultimately comes down to how people are feeling. Like what's going on in their heads.
Yeah, absolutely. We often focus on the economic indicators and the data points, but the human element is so crucial. I think it's safe to say there's a lot of anxiety out there. People are worried, understandably, about the economy, about their jobs, their investments. It's a lot to process with all the uncertainty we're facing.
Definitely. Like we're all strapped into this roller coaster, but no one knows where it's going or when it's going to stop.
Yeah.
That's got to make people feel a little uneasy.
Right, and that kind of unease, that anxiety, it can really affect decisions, not just financial decisions, but life choices in general. People might hold back on big purchases, put off starting a family, even delay career changes because they're worried about what the future holds.
So how do we deal with that anxiety? It's easy to say don't panic, but how do you actually stay calm and rational when everything feels so unpredictable?
Well, I think the first step is acknowledging those feelings. Don't try to bury them or pretend they're not there. It's perfectly normal to feel stressed, to feel anxious in times like these. Talk about it. Talk to your friends, your family, a financial advisor, anyone you trust. Sharing those concerns, those worries, it can be incredibly helpful in processing them and feeling less alone.
I like that. It's like once you acknowledge the elephant in the room, it kind of loses a bit of its power.
Well,
right? And it reminds us that, hey, we're all in this together.
Absolutely. And remember, there are resources available to help you through these tough times. If you need guidance, if you need support, don't hesitate to reach out. Whether it's financial advice, career counseling, even mental health resources, there's no shame in asking for help when you need it.
That's so important. Taking care of our mental and emotional well-being is crucial, especially during times like these. But getting back to the market for a sec, we talked about those multi-year lows in oil prices, right? It's a bit of a mixed bag, good for us at the pump, but maybe not so great for the energy sector. What are some other ripple effects we should be thinking about?
Well, it's like, when you throw a pebble in a pond, the ripples spread out. One area to watch is the transportation industry. Lower fuel costs, that can be a huge advantage for companies that rely heavily on transportation. Think trucking, airlines, even delivery services.
Ah, so it's not all doom and gloom for businesses. Some sectors might actually benefit from this.
Right. And it's a good reminder that as investors, we need to remember diversification. Having a portfolio that includes investments in sectors that might benefit from these kinds of shifts, it can help balance out potential losses elsewhere.
Diversification, it's like the golden rule of investing, isn't it? Don't put all your eggs in one basket. Speaking of baskets, though, what about our own portfolios? Should we be making any adjustments based on what we're seeing right now?
It's always a good time to reevaluate your investment strategy, especially when things are a bit volatile. Take a look at your current asset allocation, see if it aligns with your risk tolerance, your long-term goals. If you're feeling a little overexposed in certain areas, consider making some adjustments. This isn't about panic selling. It's about making strategic moves to make sure your portfolio is resilient for the long haul.
So it's like fine-tuning the engine, making sure everything's running smoothly.
Yeah, exactly. But I know for a lot of people, investing can feel really overwhelming, especially when the market's, all over the place.
Totally.
So, if you're feeling lost or unsure about what to do, the best thing is to reach out to a financial advisor. They can help you make sense of everything, figure out your goals, and come up with a plan that works for you.
It's like having a financial coach in your corner.
Yeah.
Right? Somebody to guide you through all the craziness.
Exactly.
But until then, what's one key takeaway you want our listeners to keep in mind as we head into the weekend?
I think the most important thing is to remember that this volatility, it's normal. It's part of the cycle. So try not to let the ups and downs derail your long-term goals, right? Stay focused, stay informed, and most importantly, try to stay calm. We'll get through this together.
Let's get back to our big question. Have we hit the bottom? Is this the turning point? Or should we be, battening down the hatches for more turbulence? What's your expert opinion?
Honestly, it's still too early to say for sure. There are too many moving pieces right now. Predicting the market with certainty is, well, it's impossible.
Knew you were going to say that. but come on, give us something to work with here. What are the key things to watch in the coming weeks, months? What should our listeners be paying attention to?
All right, I'll give you some insights. First and foremost, keep an eye on inflation. That's huge. If it keeps rising rapidly, the Federal Reserve might have to raise interest rates more aggressively, and that could really put the brakes on the economy.
Okay, inflation. Got it. Public enemy number one. What else is on the list?
Global economic conditions. What happens in other countries, it matters. We're all interconnected, and those events can have ripple effects here at home. So pay attention to what's happening in Europe, in China, other major economies, because their performance can really impact global trade, supply chains, and ultimately, our own economic growth.
So it's like a global game of economic chess.
Exactly. And lastly, don't forget about consumer confidence. When people feel good about the economy, they spend more, which fuels economic activity. But when confidence drops, people tighten their belts, and that can lead to a slowdown.
So it's not just about the numbers. It's about how people feel about the future.
Absolutely. So keep an eye on things like consumer sentiment surveys and retail sales. Those can give you a sense of how people are feeling.
Okay, so inflation, global conditions, consumer confidence, those are the big three. But what does this all mean for our listeners, the average investor trying to navigate this? What should they be doing?
I think the most important thing is to stay focused on those long-term goals,
Yeah.
Don't make rash decisions based on short-term market swings. Remember, the market goes up, it goes down. That's just the nature of things. This too shall pass.
That's good to hear. It's easy to get caught up in all the day-to-day ups and downs, but
Yeah.
we got to keep our eyes on the prize, that long-term horizon.
Exactly. And remember, you don't have to go through this alone. A financial advisor can be a great resource. They can help you build a strategy that works for you and provide some guidance when things feel a little shaky.
It's like having a financial coach in your corner.
Exactly. And remember, even in times of uncertainty, there are always opportunities out there. Embrace the challenge, stay informed, and stay engaged.
Love that. Well, that's all the time we have for today, folks. Thanks for joining us for this deep dive into the market. We covered a lot of ground, from the latest data to the psychology driving investor behavior.
It's been a pleasure.
And listeners, we hope you found this doc dive informative. As always, stay curious, stay informed, and stay invested. We'll catch you on the next episode.
See you then.